Hello and welcome to Explain the Charts. Today is November 6th, 2025, and we are witnessing an absolutely historic day for Tesla stock, symbol Tesla. The primary driver of today's incredible volatility is the shareholder meeting where investors are voting on Elon Musk's unprecedented, potentially trillion-dollar compensation package. The news is swirling with high drama, as Musk has essentially tied his future focus on Tesla's AI and robotics divisions to the approval of this deal. Major analysts are divided. Wedbush's Dan Ives remains incredibly bullish with a $600 price target, predicting overwhelming approval. However, others from Morgan Stanley and Bank of America have warned that a failure to pass the package could trigger an immediate and severe sell-off of over 10%. This vote is being framed as a referendum on Musk's leadership and the AI-driven future that justifies Tesla's $1.5 trillion valuation, which is far beyond that of a traditional car company. Retail investors, who make up a huge portion of shareholders, are expected to back Musk, while several large institutional funds have voiced their opposition, citing the sheer size of the package. This uncertainty has created a perfect storm, and the price action today reflects that immense pressure. Now, let's look at the daily chart to see how this story is unfolding technically. For the past year, Tesla has been in a powerful uptrend, starting from lows near $215 in April and rallying to an all-time high of $488.54 in mid-December of last year. After that peak, the stock pulled back and has been in a wide consolidation range for much of 2025. We saw a strong rally beginning in September that brought the price right back up to challenge its former highs, trading calmly in a range between $440 and $470 for the past several weeks. But today's candle is what takes your breath away. Yesterday, the stock closed strong at $462.07, showing confidence heading into the vote. Today, however, the market opened with a cataclysmic gap down to around $284. This isn't just a dip, this is a complete collapse of the recent price structure, wiping out months of gains in a single opening bell. This move sliced through numerous support levels as if they weren't even there, signaling extreme panic among sellers. Let's zoom in on the daily chart from September 1st to get a clearer view of this recent structure that has just been obliterated. You can see the steady climb, establishing a clear support zone around the $425 to $435 area throughout October. That was the key level bulls needed to defend. The price broke above resistance at $470 just a few days ago on November 3rd, which many saw as a bullish breakout signal. However, it failed to hold, and with today's gap down, we are now trading almost $180 below that recent high. The previous support level around $425 is now a massive, long-term resistance zone should the price ever attempt to recover. The sheer size of this gap represents a profound shift in market sentiment. Switching to the 1-hour chart gives us a better sense of today's intraday action following that devastating open. Here you can see trading was relatively normal yesterday, closing the session above $460. Then, the first candle of today's session shows that massive drop, opening near $284 and setting the low of the day at $275.62 within that first hour. Since that initial panic, the price has stabilized somewhat, trading in a range mostly between $280 and $290. This suggests that after the initial shockwave of selling, some buyers have stepped in, viewing this as a potential overreaction. However, the volume has remained extremely high, indicating a fierce battle is being fought at these levels. Looking back at the daily chart, we need to identify where the price might go from here. The game has completely changed. For the bulls, the immediate goal is to establish a bottom. If the vote passes and sentiment reverses, the first major hurdle is reclaiming the $300 psychological level. Beyond that, the monumental task would be to start filling that enormous gap, which extends all the way up to yesterday's low around $440. A positive vote outcome could trigger a sharp relief rally, but filling that entire gap would likely take a very long time. The bullish case hinges on this being a capitulation event, a final washout of nervous investors before the good news. For the bears, the damage is done. A rejection of the pay package would validate this collapse and likely send the stock even lower. The key support level to watch below today's low of $275 is the consolidation area from back in March and April of this year, centered around $220 to $240. If today's support at $275 fails, that's the next logical target. A sell the news reaction, even if the vote passes, could also see the price drift lower as the market questions the company's future growth trajectory. So, to recap the key price levels everyone should be watching. Immediate resistance is at the intraday high around $290, followed by the psychological barrier at $300. The most significant resistance, however, is the bottom of the gap, starting around $440. On the downside, immediate support is today's low of $275.62. If that level breaks, the next major support zone is far below, in the $220 to $240 range from the spring lows. The most likely scenario, given the high probability of the vote passing, is a volatile relief rally that will face heavy resistance as it tries to reclaim lost ground. A less likely, but catastrophic scenario is a vote failure, which would almost certainly see the stock test those spring lows near $220. Everything hinges on the result of the shareholder meeting later today. Watch the price action closely after the announcement for confirmation of the market's reaction. Please remember, this analysis is for educational purposes only and is not financial advice. You should always do your own research and make investment decisions based on your own risk tolerance. Thank you for watching Explain the Charts.